Hello everyone and welcome to this week's weekly market view for Monday the 16th of May to Friday the 20th of May 2022. My name is Vishal and I'm the head of trading education for Sharekhan Education. This week we are going to look at the Nifty, Bank Nifty, and we are also going to be looking at the USD INR and the auto sector. So let's dive deep into the charts and let's analyze some levels. Alright, so we are looking currently at the Nifty chart and we've been seeing this since the past few weeks. There has been some kind of a consolidation to a little bit of a down move coming into our broader markets. The Nifty demand zone is, the monthly demand zone is still holding, and more or less this is the second test to this demand zone. Can the prices bounce from here and give a decent bounce? Surely yes. But now if the price keeps on hovering over here and if this demand zone breaks, then we might see the markets inching lower. If you look at the Nifty weekly chart, we are again retesting this weekly level of demand. And if you look at the daily chart, we are more or less coming into this consolidation area. So what are some of the key levels for the market right now? In case if Nifty does bounce, any bounce in this market should be taken as an opportunity to go short, right? And although we may not be able to see shorts coming right away because the market has already sold off drastically, this is a key area to watch out for in the coming days or in the coming weeks. I'm just going to plot this level once again clearly for you all. This is the area which is 16,900 odd levels, and we could see a bounce coming into the market around these levels. In case if the market decides to go further down, then obviously there will be new supply zones created, right? But right now we are more or less in a higher time frame demand zone. So taking into consideration Nifty, which is the broader market, there is always a tendency for the indexes to move to the upside in the long run. We do expect to see a bounce coming somewhere around these levels in this week. Let's move on to the Bank Nifty. Alright, if you look at the Bank Nifty, and let me just get rid of all the tools here. The Bank Nifty is also currently holding this level of monthly demand, right? And right now it is just consolidating more or less. If you look at the daily chart, we do have this gap level supply zone, which is very similar to the level on the Nifty, and there is just a little bit of a gap below that, so that's a level to watch out for. The supply zone is far away from the current market price. We do have some good levels of demand below this area over here to watch out for. So in the coming week, we might see those levels being tested. Let's go to the 60 minutes chart for a moment. So there is this level of demand over here that we need to watch out for in the coming week, right? There was already this one touch, and the markets now are trying to probably just go down a little bit and retest this area. So anytime the prices do come into this area, we might expect to see another bounce. Currently the markets are weak, and any rally into this market is an opportunity to go short on this market. So just be careful on your longs, and even if you're planning any longs, try to go with a smaller position size. Let's look at the USD INR. If you look at the USD INR today, as expected, the USD INR has gapped down, and because the USD INR has gapped down, Nifty obviously is showing a lot of strength in the market, right? But whether this strength will continue in the due course of time, that's only something that will be told to us once that happens. All right. So we have to be looking at the charts right now and going to be trading purely on the levels that we see. If you look at the USD INR, there is a new level of demand which is created around 76, 74 odd levels. So this will be a level to watch out for. If price does happen to come into this area of demand, then we might see the prices more or less coming down like this and bouncing out of this area over here. So this area of demand is going to be very key. Okay, so what is the sector for the week? We thought this week we would bring up the auto sector on the chart. So as you can see, if you go to the daily chart, we are seeing a little bit of a bounce today. and that is because also the Nifty has also bounced. But there are some key levels of supply on the auto sector. One is this area over here, which is this drop based drop, and then just below that area we have this gap level. So if you see any of the stocks moving to the upside, unless and until these areas are cleared, prices will find a hard time to break these areas and go to the upside. And that's the reason why I'm bringing up the chart of Tata Motors also, because the chart of Tata Motors is also showing a very, very similar picture. And if you look at Tata Motors today has gapped up, but it's going to still have a little bit of a tough time moving to the upside, because it has these levels of supply on the way. Now currently price is nearly more than 70 points away, but Tata Motors is going to probably face a little bit of a barrier around this area, right? Now the reaction that you are seeing on Tata Motors to the upside is because of this level of demand over here. So you can see this very, very subtle level of demand. Prices came here once, right? And they pierced this level of demand, and now they are moving up. So whenever the levels pierce this level of demand, this demand is no longer a level of demand, and that means more supply is coming into the market. So what we are expecting on Tata Motors is that even if Tata Motors gives you a strong bounce, it might do something like this, get into this area and continue its move to the downside. So this is how we are looking at the stocks and the sectors for this week. I hope you enjoyed the analysis, and if you do like our the way we do our analysis, do not forget to subscribe to our YouTube channel. See you all next week, and looking forward to see you to analyze more markets and more sectors next week. Till then, goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.